and welcome to the CNBC TV18 newsroom. I'm Ekta Batra and you're joining me on your stocks this Monday afternoon. Well, joining us today, we have Ashish Kyal from Wave Strategy Advisors and Parthiv Shah, who's the director at Tracom Stock Brokers. Ashish is going to take us through the technicals and Parthiv is going to take us through the fundamentals. Before we kick off and start discussing a couple of queries, wanted Ashish's view with regards to the markets, considering that the Nifty has just gone from strength to strength today. The Bank Nifty has come back in full force and it's up around 1.6% as compared to the fall that we had seen in Friday's trading session. So in that context, Ashish, wanted your thoughts in what is quite a strong start to the week.
Absolutely. Afternoon to you and all the viewers as well. We can clearly see Nifty trading near the day's high, and even Bank Nifty has recorded most of the losses it showed on the Friday session, which is a positive sign. And Nifty managed to take out the 18,270 level. There has been a huge, put build-up that we can see at around 18,200. So that is going to act as a support. So I think the market is poised for much higher levels from here. We might be headed towards 18,500 from here on. And on the downside, use any dips towards 18,200, 18,170 as an opportunity to enter the trend. Do not try to catch a top in this market. It looks very, very strong, and the rally is broad-based. If you look at the sectors, if you look at sector rotation is happening, and the rally is broad-based, everything is participating. Mid-cap, small-cap stocks are also participating. So it's a healthy sign for now. I think markets are headed higher.
Okay, you think markets are headed higher from these current levels? We do have the Indian Bank numbers on your screen, where the net profit is up around 47% on a year-on-year basis to 1,447.3 crores. This compares to 984 crores on a year-on-year basis. As you can see, the stock has recovered from the day's low, and you can see a spike up on an intraday basis. The NII too is up close to around 30% on a year-on-year basis. So good going for Indian Bank in terms of performance. We'll wait by for the asset quality and whether or not there is any kind of significant improvement or sustainability which has come through for Indian Bank when it comes to asset quality, as well as the details from the presentation. But as of now, looks good, at least in terms of the NII as well as profit. Part of queries, then we have a lot of questions to be answered, and what is a very lively market, so maybe a lot of stock specific queries this afternoon. First up, we have Mayank Kumar, who writes to us from Mumbai. He holds 20 stocks of Ultratech Cement, which he's bought at around 5,000 odd rupees, and he's got around 40 shares of Ambuja Cements, which he's got at around 250. He wants to know what to do, whether he should remain invested or sell his holdings at current levels. Well, both cement major, those are the Indian Bank gross NPAs, and there's been an improvement which has taken place both in the gross as well as the net NPA. So the net NPA is a sub 1% figure. It's coming at around 0.9%, and we have the gross NPA, which has improved to, I think I saw, around 5.5% odd versus over 6% on a Q-on-Q basis. So maybe that should come up for you as well. As you can see, the stock has in fact turned into the green post the asset quality figures which have been released by Indian Bank, and is showing actually a good performance. As you can see, the stock is at the high point of the day, showing buying at these levels. So that's the view coming in, or those are the numbers rather coming in from Indian Bank. But let's get to another query then. We have Atul Kumar, who writes to us from New Delhi. He holds 100 shares of PNB Bank, which he's bought at 40. He says that though he is making a minor profit, he wants to know whether he should exit and invest in some more profitable stocks within the same space, such as State Bank of India. Interesting question there, considering that the cycle has turned for a lot of the PSU banks, and you can see it on your screen with Indian Bank as well. So Ashish, in that context, technically, what would you recommend on PNB? And Parthiv, I'll get to you just after that on a fundamental view.
See, I think his investment is at 40 and the stock is quoting above 50 rupees. So I think he's not making just some profit, he's making a good profit here. There is no reason for him to exit Punjab National Bank, because we can clearly see it has started the next leg on the upside, possibly a third wave on the upside, and the trend remains positive. So use that, keep on holding it as long as on the downside. I think 48 levels are intact. But yes, he can diversify across to SBI, because State Bank of India is also showing a very good momentum, and the chart looks promising. So maybe book half profit from PNB and diversify into SBI, so that his risk get diversified, and he has taken something off the table as of now.
Okay, all right. Well, that's the view coming in. Parthiv, All right, quick technical take, Ashish, on these three stocks.
See, if you look at the overall movement of HDFC Bank, it has we can see some gap down opening, but that is because of the rejiggling which is happening. But I think the overall stock looks very good. On the upside, it's an opportunity to possibly buy more if you want to, and we can expect a target on the upside towards the level of 1800 in HDFC Bank, as long as on the downside 1560 is intact. As far as BPCL is concerned, we can see a lot of volatility. It has gone up from 325, gone towards that 370, 360 mark, again went down to 330. So the volatility is high in BPCL, and we can clearly see over the period of last 1 year, it has not given much of a very strong return that we can see from the other stocks. So my advice would be currently hold on to BPCL, maintain a stop loss on the downside at 350, just in case the stocks move back below that 350. It's better to be out from this and diversify into SBIs or HDFC Bank and those stocks. And as far as power grid is concerned, the momentum is still picking up on the upside. Clearly, a very strong breakout has happened about that 238 mark, which was acting as a major hurdle for most of the occasions. A very strong breakout that we can see on the charts, and the sector looks to be good. So continue to hold on to power grid. The target can be around 280 levels, and on the downside, the support for the stock is at 230.
More queries that we have this afternoon. Sonal Jain writes to us from Chandigarh. She holds 50 shares of Infosys, which she's bought at around 1,000 odd rupees, and 40 shares of TechM, which she's bought at around 500 odd rupees. She's considering what to do, considering the disappointment that we've seen in terms of the Q4 FY23 earnings, especially from the likes of Infosys. Okay. All right, Ashish, what about you? Technically, how would you approach a couple of these IT stocks, considering the likes of Infosys is still hovering close to its 52-week lows?
Yes, we can clearly see there has been a very sharp fall in Infosys stock, and post that it is not showing much of a recovery sign. But on the contrary, if you look at the mid-cap IT names and something like Cyient, or if you look at stocks like Persistent Systems and on many other IT names, Datamatics, you can clearly see most of them has performed exceptionally well. So I don't think it is the question because of the AI, this large cap bellwether are going to face issues, because it's anyways going to get more efficient, and their things will span out in a much better way. Who knows? So I would say that I think the IT space, the IT sector as a whole is going to turn up. It's going to outperform. It's only a matter of time that some consolidation is possible in Infosys and Tech Mahindra. Both of these stocks can consolidate for some time and eventually should move higher. So I don't think investors should be worried about the sector as a whole or about the stocks, because these are good levels. If you want to enter, maybe average out more at these levels. And for Infosys, the support on the downside, very important support on the downside, is going to be at 1180. As long as that is intact, the first target we can expect is 1380, which is the gap area. For Tech Mahindra, again, multiple supports. It has taken around that 980, 960 levels. It has been months that it has protecting that level and bouncing back from there. So I am expecting Tech Mahindra over short term should bounce back towards that 1140, 1150 levels. And once it breaks that consolidation zone, up move can be expected in Tech Mahindra, even crossing about 1300. So hold on to both of these stocks. Maintain stop loss if you are anxious about it. But I think IT sector as a whole is going to outperform.
Okay, all right. So you're positive on the IT sector, and Parthiv's view also was quite positive on the entire IT space. So let's see whether there's any sort of comeback from these levels. But let's get to another query. Rahul Jain writes to us from Patna. He holds 50 shares of LIC, which he's bought at 500, and 40 shares of Zomato, which he's bought at around 50 rupees. He's a medium-term investor, wants to know what to do, whether the new age stocks get better from their current levels. So we have both of them currently making money for him, but nonetheless not significant returns as of now. So in that context, Parthiv, we're going to wrap it up on that note. Thanks very much for joining in and taking us through all of those questions that we have on this Monday afternoon. That's all the time that we do have on this show, but do remember you can email us your queries and we will address them with our experts. Stay tuned. Closing bell to take you through the last hour of trade.